back to the Daily Report and welcome to the Marketplace. Tonight we're talking about digital lending. It's gaining popularity in the country. A lot of Kenyan youth, Kenyan adults are taking part in digital borrowing. Now, on average, between 5,000 to 10,000 shillings is what people usually borrow. And one might wonder why exactly, this amount. And you would find that people are only borrowing to do, their daily tasks, to get rid of those bills that usually occupy or that add up every single day. These are the small things you pay for: your grocery, your transportation bills, a bill here, a bill there, medical and health care. Now, in my panel tonight, I have Wanjiku Wambugu, who is the CEO of Nyali Capital Limited, and she's just going to be telling us about credit and lending, how exactly that realm is doing. And I have Jared Getenga, who is the CEO of CIS Kenya, which is the credit information sharing, and he is just going to be telling us about how exactly information is very important when it comes to lending and how this is essential in regulatory frameworks and building up these regulatory frameworks. Jared, I'll start with you. Kenyans are borrowers, but Kenyans are not very big on saving. Why do you think this is?
Well, it's a culture thing. It's easier to use money that is not yours than to put away money that is yours. And sometimes when credit is used, people use it for different reasons. Some would like to use it to invest in something that will give a return. And if you can get money from somebody that is not yours to invest into something that will give you a return before you repay it, that's a brilliant experience. Unfortunately, many others will use credit to consume. Others will use it for something that will not give a return financially, but will be profitable in the long run because it may not be an income generating activity. Like if you are paying school fees, that's sensible because you may then be able to repay with an added value to yourself. So yeah, people have good reasons to borrow. Right,
and the economy is always changing. Sometimes it's in your favor, sometimes it's not. Maybe if you could just bring some clarity. Credit information sharing, what exactly does that entail?
So because a lot of people borrow, some do pay, others don't. The lender who is meeting you for the first time doesn't quite know what your character is when it comes to loan repayment. And in the past, before credit information sharing was established, lenders had a lot of difficulty determining what is the character of the borrower. And we had a lot of a crisis actually in the 80s and in the 90s. There was a financial crisis, and lenders attributed it to what was called information asymmetry. Information asymmetry is where the borrower has certain information about themselves that the lender doesn't. They are probably borrowed in several places, and the lender doesn't know. So we came up with a framework for information sharing, which allows lenders to get a glimpse of each borrower, the scope of their borrowing, and it's not a bad thing because many times the borrower is also able to say, wow, this is a good payer. They have been paying in their circle over the years. Now they have matured into probably a bank, and they have a lot more confidence. Without information sharing, it would be a story you would be telling the bank. I'm a good guy.
Fighting for your life.
Fighting for your life. But this is now an independent source of information, properly structured, equipped with data from different sources, and it gives a very credible picture to the lender. So we set up independent institutions called credit reference bureaus, and then we got them to be licensed so that they could be, supervised. They could follow proper structures, protect, the information they receive, have security features on the data that they receive, their algorithms to be good, issue credit reports, and that kind of stuff.
All right, Wanjiku, this clarity for, credit providers is very important. Knowing the person that you're going to give this money to, this amount to. Maybe if you could just tell us, you deal with business to business, crediting. What exactly does that entail?
A little bit about us. Nyali Capital. Nali Capital is a credit-only microfinance, meaning we don't take our funds from the public,
Right.
so, but we do lending. And we started in Mombasa in 2013. And the lending business has actually been made easier, like Jared said, because of the information sharing bit.
Right.
When we started in 2013, I remember the biggest challenge was borrowers came to us. Borrowers came to us because they knew there's a new microfinance that has opened somewhere.
Right.
And I think that information runs very quickly. And at the time, the information sharing bit was not as it is today.
Right.
So we were not able to find out, have these ladies or these gentlemen borrowed elsewhere. But now with CRB, we could be able now to check. And I think even Nyali Capital was among the first agents of CRB at the time.
Right.
So we were able to help them also get their reports. The clients get their reports. And at the same time, we're able to check the reports of our clients. So that in the end, you can be able to tell they have borrowed here, 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 here. But that didn't start immediately. At the beginning, the ladies were borrowing so that they could pay up another microfinance.
All right.
Yeah, so that information sharing bit has been very important.
Okay.
Yeah.
Wanjiku, maybe if you could just tell us, things are changing. You know, now we're moving from an asset-centric, sort of credit giving to a more, who is this personality? Are they able to pay you? Gauging someone's, personality and how they usually, the behavior they have when it comes to paying. How important is it to have this particular information for you?
In credit, what we say is that, and especially with all financial institutions that lend, is that we make money when we are paid.
Right.
Yeah, so if you lend and you haven't been paid, then you kind of lost everything,
Right.
like your principal and everything, including the cost that you may have incurred before you disbursed. And so it's very important for you to guard that the money you have given out, and especially for us who are credit only, to come back, because this money maybe you've borrowed from the banks, or maybe they're also investments that you've made into the business.
Right.
So very important to check what we call the 5 C's, and the first C is the character. So that character is key. Sometimes it's not quantified, like you would say maybe others could be the other C, the last one is the C, which is the collateral. It's maybe what security the client may have. So at least that you can be able to check the value. Is it a logbook? Is it the title deed? But the character is one where a few things that you may check. There are people who would say, I have the money and I won't pay you.
Utadu?
Yeah, utadu.
Right.
And you keep chasing them,
Right.
but they don't pay you. But there's another one who is saying, Wanjiku, I do not have this money, but sasa every Friday, nitakuwa na kuwekea hizi. Wanjiku, every Friday nitakuwa na kuwekea hizi. So that is where also character comes in. A few things about characters that we also check, maybe even from the M-Pesa statements, because we ask for that so that we're able to check the transaction, the number of transactions and the frequency of them. Sometimes we even check the hours that this person maybe is also paying their bills. Depending on what they do, does it align with the hours that maybe they're making the bill, they're paying? Maybe is it at the club? Is it 2 a.m.?
Right.
Those are some of the few things that you check and you start putting question marks, and maybe the borrower at the point of application may not realize where we are asking for that information. But character indeed is one that determines whether we are going to be paid back our money or not, beyond everything else.
All right.
I'd like just to add something to Wanjiku's point about character, which is really, you asked the question about how have things changed, how have things evolved. Character was not quite a focus area in the past. The other C, among the other C's, is the issue of collateral.
All right.
So in past lending, the focus used to be, if you have given them a good collateral as a lender, then they would feel a little more comfortable that should you fail, they will sell. But things have shifted from physical collateral as a basis for lending to now what we would call a character as a collateral. So I think there's a shift there, and that's what is really transformed lending in these times.
Right.
Yeah.
Before we even delve into that, Jared, let me just finish one question with Wanjiku. Kenyans borrow between 4,000 to 10,000, 5,000 to 10,000 shillings. What do you think triggers this? Because one would think that if you're getting a loan, you're going to get a huge amount of money, you start your own business so that you start getting that money coming in. Why is this the amount that people go for?
Allow me to speak from maybe what I think. And this could actually be controversial.
Right.
But I think there is also enough credit. There are various, there are so many mobile platforms today.
Right.
So it's not a matter of, you can easily access money. It's for you to choose whether I'll use this platform or the other platform, or I go to Nali Capital, or it's really up to you.
Right.
So what maybe you're not able to do is looking at your capacity to pay, which is another C. So your capacity to pay, if you borrow more than, say, 10,000, and you're only earning maybe 12,000,
right,
then of course that's a problem. So I think even the borrower themselves, they are able to weigh how much can I borrow. Number two, there are all these algorithms that Jared talked about, that even you're actually borrowing from the mobile platforms.
Right.
They have been able to look, they can be able to access your information and know, again, what is your capacity to pay. They can be able to tell how you've borrowed last time, did you pay with difficulty or did you pay in time, and so they keep on reducing this amount or increasing the amount depending also on your ability to pay. Again, these amounts for me, and because I come from a space where I finance business people more than I finance borrowers for personal use.
Right.
So it's also more of a consumption, like you said earlier. I'm borrowing to pay a certain bill. Right. I'm borrowing to repay another loan that I took, and I'm not able to get the money to pay. It's mostly now for consumption. So for consumption, also that amount gets to be smaller compared to when you may be borrowing for a bigger purpose, maybe like a project.
Right.
Anyone, maybe even for me who is a member of a circle, if I'm to borrow from the circle, I'm likely to get like 3 times of my savings. So if I saved 100,000, I'm able to get 300,000. So with 300,000, there's a project that I can be able to run that I even have planned for in advance. But for this 5,000, 10,000, I think there's a particular group, and especially mostly the youth, who are being targeted. So they're always running on a cycle. It's a vicious cycle that once you repay, you take more. It used to be like that, the same vicious cycle, but for projects, maybe for people who have been here for longer, because when you finish repaying the circle loan, you're also checking your pay slip, for instance, to see which is the next project that I'm going to do. Right. But you say maybe you've paid for about a year, 2 years, and then you're also ripe for the next project. So now, today, with the 10,000 or less, it's really not for the project, it's actually for the next consumption, which I think is really not interesting. It's a sad situation as it is.
All right.
Yeah.
Now, of course, you can send in your questions on, 22427, which is on the screen, or on our socials at TV47 News, at TV47KE. I'm already seeing some questions are coming in. Jared, I'll direct this one to you. Online loan institutions or loan apps and apps have high rates. Why do you think this is?
Have high rates? Probably high default rates. Maybe that's what the questioner means to ask.
Or a high service interest. Yes.
Or it could be interest rates. Okay. Yeah, it's understandable that the app kind of lenders would charge higher. It's perfectly explainable. Right. Partly because this app, they source their money from either their personal capital or they borrow from expensive sources. Right. Unlike many other lenders like commercial banks who have licenses to take deposits. Okay. And when they mobilize deposits, the interest that they pay on the deposits is fairly low. And so they have a bigger room to play around with their interest rate, and therefore they can charge much less. The apps use capital that is usually expensive if they are borrowing that money, or those who invest in this kind of opportunities are looking for a higher than normal return. Otherwise, they would have put this money probably in a treasury bill.
Right.
And they would have earned reasonable interest. Now they are taking a high risk putting this money into the app platforms.
All right.
So it's understandable. Then secondly, you know, they don't know you. The app guys don't know you.
Right.
They are taking a chance on you. They may not be able to get hold of you because they may not have taken all the details around where you live or around where they may not have a pay slip to cushion them, a security to cushion them. So the risk is high, and that explains the higher interest rates.
Right. Before I go to Wanjiku, maybe Jared, if you could give us your insights. Are they regulated by CRB? And this is a question that usually really comes up. A few years ago, you know, the CBK was regulating some of these digital lenders, and most of them didn't, you know, hit the cutoff points. This regulation, how important is it? How can you identify that you're being, you know, you're borrowing from a platform that is okay with the government?
Okay. Yeah, so there are many credibility levels that regulation is one of them. And it's an important one because you expect that a lender who is regulated will treat you with some element of decorum, will use certain standards even when they are collecting the loans. There's an element of trust that this is somebody who will treat you well and whose interest rate might be expected to be reasonable when they are regulated. And so the central bank came up with a rule that digital credit providers needed to be licensed so that then they could have some responsibility and accountability for the business that they do, knowing that if they mistreat you, for example, there are accusations that they sometimes debt collection practices are not friendly, then the central bank would be able to withdraw the license or punish them or fine them, penalize them. So yeah, many of them are not licensed. The central bank asked that they be licensed. A number of them have asked for licenses. 58 of them have been licensed to date. It's a bit of a slow process, and there are many others who are looking for license and have applied for it. So they are at reasonable stages of being licensed. As long as there is an application sitting with the central bank, and the central bank is engaging the digital credit provider, you would say that they are above board.
All right.
Yeah.
Now, Kenyans or borrowers themselves have a habit of borrowing from unregulated, you know, digital lenders. We're seeing over 2 million Kenyans borrow from unregulated digital lenders. This number is rising very fast. And someone is asking you, Wanjiku, threatening messages is what we get when one has just defaulted by a day. Why do you think this is? Just a day.
I don't know why they feel threatened. I don't know what the threats would look like, but I know in debt collection we do reminders.
Right.
Yeah, like if you're to repay next month. So you borrow today is on the 25th. You borrow to repay in a month. So whether we are following you physically with a call or maybe with a message, maybe like 1 week too, would remind you that this money is due on this day. And then maybe a day too, then you would also remind you that it's tomorrow. Maybe again on the day, in the morning, we would have to remind you that it's today. What time probably are you making the deposit? So, and I'm sure those are some of the messages that they receive. And part of the reasons why that was rampant before, I think the threats are not happening anymore. And that is what brought up the digital credit provider and the regulations around it, so that the credit providers are not, the clients are not feeling like they're being threatened and they are the mercy of these people. However, just to have some balance where, again, the clients should know that it's also a lot of work to do debt collection. It's really not easy. We say we provide financing, but what we do on a day-to-day basis in our offices is to ask whether this one has paid. Why didn't you collect this one? Follow this one. Please get this one. Tomorrow morning, don't report to the office.
Unless, that's why I think they're usually frustrated, because they tell you, usipolipa, I'm texting everyone in your phone book, I'm going to tell them so and so doesn't repay.
No, I think that has stopped.
Right.
That has stopped. And we also say it can work like, if you know, for instance, you're not ready and this was your day, I think you should be proactive and just communicate in advance. I think that would be very nice if those are the messages we received. Like, by the way, before you threaten me, those messages that keep coming, I'm even fearing them. I want to tell you that I'm not able to pay tomorrow. However, on the 27th, you guys expect this money.
All right.
Yeah.
There's the aspect of debt shaming, right? This is, I assume, in a situation where an individual has not paid, and considering now that some of the, CRB measures have been, laxened a little bit, you'd find that they try to be polite about it, some credit providers, but there's still an aspect of debt shaming. Jared, maybe if you could just tell us, does this usually work? Are there limits? What sort of lingo, is being used in that particular realm?
Yeah, there was a lot of concern in past years that debt shaming was becoming rampant. Unorthodox methods were being used to inform friends, family. Imagine your imam being told,
right. How embarrassing.
being told that your friend is not paying. That was really bad.
Right.
Parents, and the idea was that the person whom we should be told is the one who there will be greatest impact in terms of embarrassment. So the higher the embarrassment, the more chances that you will pay, because then you will have been shamed.
All right.
That was discouraged completely, and actually its impact was horrible,
right.
because there are people who were so embarrassed, and it was clear that there were some who were even committing suicide because their social circles got to know about their defaults.
Right.
So that was not acceptable.
Okay.
Yeah.
We're going to be delving into all of that in a little while, and we also want to see what the government is saying, because the government is also a digital lender through the Hustler Fund, and it has an almost 33% default rate. We will be looking into those numbers. We see what is happening in that realm. Don't go too far. We'll be right back.